Hello, Bitcoin traders. Welcome back for another episode of Bitcoin Technical Analysis on the Daily with me, your friend, Rocky Outcrop. In today's episode, we'll be checking out the Bitcoin charts as ever and seeing, will there be a gap on the CMEs? There could be. Let's take a look at that in just a moment. But before we dive into the charts, I just wanted to point out that here I am in the garden planting a fruit tree. And isn't it a good thing to do, to plant stuff and to think about the future? You don't need to make all your money in all of your trades at the one moment. Sometimes you need to think about the future and be patient. And that's always a good tip for trading and for gardening. Let's go and take a look at the charts. Okay, so that's the plum tree in the ground now, and before we dive into the charts, I just wanted to add a little bit to my starting part and say, hey, I'm going to talk about GBP and Ethereum in this video, so there's bonus content in there, so stay tuned to the end. Thanks very much for joining me.
Hi, so thanks for joining me in the Bitcoin chart, and up behind me you can see that I've got the CME charts open, and I'll just be honest with you here and say that it's kind of unlikely that we actually do get a gap. I did say in the intro to this video that we could, and well, we certainly could, but let's just have a quick look here and see what the prices are telling us from where they close. So 9,755 was the top of that wick there. 9,345, say for instance, 9,000, something like that, at the bottom of that wick. So you're looking for prices around 9,200 and or so. 9,250 would be about equivalent here. So you're looking at 9,100 or something for a gap, and 9,700 up here to get a gap at the top side. Indeed, though, if the prices did, spot prices were to be around 9,100 or so, or 9,000 even, actually, when the CMEs open back up tonight, at about 11 p.m. GMT time, I think, then you would have that gap from before filled. Okay, so that's pretty much that covered. We can now actually get on with the proper technical analysis. Up here you can see the price, 9,440 currently, so that's pretty good. 9,000, that's CME price, excuse me. Right, so technical analysis, as we were. 9,414 is the current price. 9,135 is the lows of the day. 9,474 is the high of the day. So I hope I got those directions right as I point around, because I'm not actually a weatherman. Right, now, let's have a look here and see how things have been over the last few days. In fact, you can see here on this time frame about wicks that have gone down. You can even put it on the 2 days, where you get this lovely arrangement of wicks or spindles coming down and touching this area here, just testing it, and giving us a series of great entries for longs if you were just in and out of the market and around there. Now, I'm not a financial advisor, and nothing I say is financial advice, and that's the caveat that I think I should throw out there for everybody, just so you know. It's not really for you though, but mostly for the YouTube moderator types in the world. Okay, so here we are, and that's the spindles there on them touching that, and I think that really, if you've been bearing this in mind, then you'd have got some good entries and good exits over the last wee while, especially when you look at the high here, 9,474. That's close enough. It's close enough to the 9,500 area. If you were just only looking to take profit and scalp in that area, then that would have been very, very easy. Should I put a horizontal line on the chart? Just bring out the drawing panel. Again, if you want to get a bunch of tips on how to use TradingView in an efficient manner, then check out the TradingView or the trade spotting TradingView tutorial. It's great. So a horizontal line, and I'll just stick one in and around there. Why not? That's 9,600. Actually, I think I'll drag that down a wee bit to in somewhere around the 9,500 or so area. So there we go. Now we have that on our charts. We can review how this goes over the next wee while. Now, what have we been looking at recently, really, on the Bitcoin prices? And it's quite simple. We said in yesterday's video that potentially there's a head and shoulders, but we also thought that it was bit nonsensical really to be drawing out patterns on the 1 hour time frame. Nevertheless, we went ahead and did it anyway. And was there a head and shoulders, and did it pan out or play out? Well, you know, almost, or whatever, almost. And the 1 hour time frame, it came down and almost got to the 200 exponential moving average. On the 4 hour, I think it got almost to the 55. You know, that might have been touching where the 50 is if I could change that. And you can see that this line here that we drew in has been functioning quite well in terms of giving us a good area to be able to manage risk around. here for our entries. And then again, of course, bear this in mind. This is what we're really looking at to see if we can turn the trend around. Now, it's Sunday today, so it's a good time to look at the weekly chart. We've covered the CMEs already, flying through the video today, so I think I might have a little bit of time to do something a little bit different towards the end, which is cool. So here we are, and we're looking at the weekly, and really, do we think that we're going to bust above this today? Well, it has the possibility of happening. It could happen. If it did happen, you never know, you might get a gap on the CMEs, like it's pointing out. Although, do I think that it's quite likely that we don't actually bust through it this week and get rejected on our first pass, maybe spend some time during next week in this area here before then trying up again? Yeah, I think that's quite likely overall, although it could be the case that we just fly on up. It could easily be. I feel like this sort of thing, this sort of candle here could come into play, but then again, you could just have another one like this and just get more continuation up. It isn't really that big a deal, really, overall, because what the big deal is whether or not we can get up above here, and really we've just got today left to do it. We're so close now at the moment that we could just do it next week. It doesn't look like we've had a big rejection from that area. It simply actually looks more like we just got rebounded off of it on our first pass, and that's what we'd normally expect to happen. So that's how that's sort of shaping up at the minute, and of course we can check back in again here just for the fun of it. Look at that candle in the monthly. Wasn't that a wonderful candle to have? And we were very privileged to have had a new high here, and that is good for the longer term trend. Of course, this one here, this new month that we're in at the minute, February, is starting to look like it is a green candle at the moment, and that's nice, but there's plenty of time left in this month, and anything could happen. So we'll not count our chickens on that one just yet. Of course, on the downside things, then you're looking at anything above here, where the channel is, would be a higher low. So it could even come down here and set in a higher low and be supported by this channel in and around that 7,700 area this month, and not actually be an issue at all in terms of the macro trend if it were to continue to go on up. Now, do we want that to happen? No, we don't want that to happen. There is something to be said for wanting small pullbacks time and again, every so often on and especially when you look down on the lower time frames, that sort of speaks for itself. Having the occasional pullback as you're trending is just kind of natural and all par for the course. As you can see, these things happen. So can we expect something like that to happen and set in a higher low, as if you were to say this is the higher low and higher lows, and we have higher lows here, all as part of an uptrend and amongst higher highs? Yeah, that would be totally natural and normal. So we could expect something like that to happen. And let's just see then, have we got anything jumping out at us in terms of divergences on the 4-hour chart, or anything else in terms of appearing on the charts? Do we have any patterns here that are worth really mentioning? Not really. Nothing really worth mentioning. Not really. I think there's no point in doing clutching at straws trading technical analysis just to sort of give my YouTube channel some sort of headline or do any clickbaity thing. I respect my audience, as small as it is, far too much to do that sort of thing, so I'll not really bother with that. Let's see down here. Well, the divergences that we've pointed out over the last few days, they still exist, these bearish divergences. So there's that. But, we're in this period here of consolidation, sideways consolidation. It's really more a case of the fact that the price has come up. As you can see in the weekly, the price has come up to test what would be a nice thing for it to turn around for a longer term trend in this area here. And that's really what's going on. And to have a degree of consolidation here, a big area of support, is absolutely to be expected overall. After that area, then you've got a little bit more headroom where you could have larger rises and things like this. Is going back to the all-time highs here in the weekly chart. So you can see the VPVR kind of just essentially drops off all the way up there. There's very little, relatively speaking, very, very little trading activity everywhere from 14,000, or even actually, let's be clear, that everywhere from 12,000 up, there's basically, relatively speaking, nothing on the charts all the way up to 20. So that's where it becomes like an interesting zone in terms of trying to figure out where the price could potentially be going after that. But just in terms of let's just look at what's in front of us and what we've got next. Well, we have the 50% retrace here on the Fibonacci that's going down on this move here, as denoted by that channel. And that's in and around the 10,000 mark. And of course, 10,000 itself is a big round number. and that is a psychological level too, because we're human beings, we can't help it. And then you've got the 618 in around that 11,000 area, and there is a CME gap somewhere in around here. I could maybe find it here if I take just a second to look. I don't know. Why did somebody let me know in the comments? Actually, that'd be great if somebody could just let me know in the comments where that is. That'd be great. I can't remember now if it's even there. It doesn't actually look like there is one just on brief glance here up at 11,000. I was pretty sure from the past that we had. Maybe it's just a 4-hour one, in which case you can more or less ignore it anyway. But I don't really have the screen real estate here on my laptop to go looking for 4-hour gaps up so high. I mean, you can see. So we'll skip that. Now, that's pretty much everything covered. You know, there's not an awful lot to talk about this Sunday, really, to be perfectly frank. There's a couple of interesting things in the world, though, that I would like to point out to you. Now, you may have heard of this thing called the Fear and Greed Index. Let me just stick the URL in here, and we can go have a look at the Fear and Greed Index. Now, the Fear and Greed Index is at the minute, it's up there in this good area, indicating there's a degree of greed in the market. Now, I just thought it'd be worth pointing out how this thing is made and bring in a little bit of news, just so you've got a better idea of how things are going. Well, the Reddit sentiment analysis is not yet in the live index because they're still experimenting with keywords and all the rest of it. Our Twitter analysis is running. Okay, so it's running already, and they don't even actually manually do it with humans. It's robots that do this. Right, so what do? Well, they gather posts, they count the posts on various hashtags for each coin, right? And publicly, we only show those for Bitcoin. So the Bitcoin one is the only one, really, that matters, right? Okay, and it's part of their automatic, publicly published results in the Fear and Greed Index. And then what do? They check how fast and many interactions they receive in a certain time, and an unusual, unusual high interaction rate results in a public growth interest in the coin, and in our eyes, corresponds to greedy market behavior. Well, okay, why am I pointing that out, and why am I drawing specific reference to how this part of the Fear and Greed Index is constructed? Well, you can just go Twitter new Bitcoin emoji, and everybody's been getting excited about this sort of stuff on the Twitter sphere. And let me just see, there's a picture there. Who's this? Crypto Slate. Well, there's a shout out for our website. The lucky guys with their SEO got them to be top. Let's hope they load fast. And there it is there. Isn't that wonderful? No, I do not want to have notifications from you. Isn't that wonderful? Well, I'll let you decide. Personally, when I heard about that, when I heard they had a Bitcoin emoji, what I was actually looking for would have been something more like this. You know, if I go images, for instance, and you see Bitcoin emoji. Let's just go Bitcoin emoji. Bitcoin emoji. Look at all these emojis. When somebody said to me, "Oh, Twitter have got a new Bitcoin emoji, and it's exciting and everything else," I thought, "Wow, that's wonderful. Maybe it'll be something like one of these crazy things. Isn't that great?" Instead, it's just the Bitcoin logo automatically appears when you use the hashtag Bitcoin. Okay, so that's the news there, and that actually means that anything that you see on the Fear and Greed Index will be skewy wrong. I don't really use that thing anyway in the first place because I think it's pretty wrong anyway to be relying on that sort of data. But some people do, and those who are using it at the minute should be aware that the data on that Fear and Greed Index will be skewed by the fact that lots of people will be using the hashtag Bitcoin in order to get the emoji to appear, because that's exactly how it works, as we saw on Crypto Slate there. So the prices have actually dropped down here when I've been talking to 9,373. So that's kind of interesting in a small sense. But since we're here in the smaller time frames, I expect, generally speaking, that any drop down to 9,224 is of literally no consequence because of this yellow exponential moving 21 moving average there, where you can expect the price to come down very, very frequently too, as we've seen so often in the past. And of course, what we really have here is this line of the 9,173. If there was some sort of head and shoulders here and it played out, and this wasn't the fulfillment of it there, which it may well could have been, because as you can see here, the price got as low as 9,100 or so, 9,130, depends on your exchange, and came down as much as there's other confluence and supporting factors, such as, well, in fact, this line here for a start and the 55 moving average. Yeah, maybe though, it could still something like that could still happen, and the price could go into 8,900. Although I think that's quite unlikely at the moment, right? Okay, despite the fact that we've had this bearish divergence, I think this will actually probably resolve itself fairly soon. And is there any sort of hidden bullish divergence? Well, there's a touch of hidden bullish divergence here in the MACD, you could say. Not on that, and not on that. Okay, so skip off this here. Now, what was the other thing I wanted to point out? I just wanted to show everybody how well Ethereum's been doing. I've had a lot of people actually request, and thank you very much to anybody who comes along, gives me any suggestions or requests in my videos. I've had a lot of people come in recently and request me to look at Ethereum. Now, isn't it a different chart and an interesting one? Well, I'll just go up and do a bit of a real brief look on, let's even go as far as the 2-day. And we can zoom out here and we can see, as a really sort of brief rundown, what I expect, or what sort of parameters I can put in. Now, maybe in the future I'll give better or more detailed analysis of this, but you can see that we were in this huge channel here for such a long time. When did I draw this in? I must have drawn this in, well, sometime in 2019 probably. That's quite likely. Anyhow, we were in this big old channel here, and then we're in another one probably you could draw here, some sort of descending wedge, possibly, I don't know. And then over the last while, just like Bitcoin, in fact, we've seen a similar sort of pattern. In fact, Bitcoin and Ethereum really do generally follow each other's trend. No doubt this was in around June, of course, June, yes, indeed. And then this will be December 16th or so, or January, December, middle of December, where we hit our lows, and then January. Yeah, okay, so that's the same as Bitcoin, more or less. Now, I'm not being dismissive of Ethereum, but it is more or less the same as Bitcoin. And thankfully, happily enough, many moons ago, I obviously drew in some supports and resistances. And what do we see here? Well, we're currently actually above some support that I drew in at around 183. Now, let's just have a wee critical gaze back on what I did in the past. Well, you can see, I guess, those are the reasons why there, and there, and there, and there, there, and there, and there, why I had that line in there. So that would have been resistance up until very recently. And at the same time as breaking through there, we've broken up above the 200 simple. This is on the 2-day, in fact, which is even more significant, but it's not hugely different on the 1-day. Broken above all these major moving averages. And what have we got? Well, we've got the 21s crossed above a few, so that's not a golden cross by any means, but those are bullish signs, and that's a good thing to have. And could we have a golden cross on these exponentials, the 55, 50, and the 200 at some point in the near future? Well, not as likely as Bitcoin. If we just flick over back to Bitcoin for a second, still on a 24-hour chart, you can see that we have, I'm going to turn my computer to silent because I'm getting messages in the background. We can see that, in fact, we have actually had a golden cross. Now, I don't call this isn't the golden cross. I like to be specific and use the indefinite article. That's an ironic sentence there. I'm sorry for being so esoteric. I can't stop. So I thought we'd put this here. This isn't the golden cross, because the golden cross is the 200 simple and the 50 simple crossing. Okay, but this is the exponential moving averages. So this doesn't constitute from the classical charting textbooks what a golden cross is, but this is certainly a very useful one in the history of Bitcoin, and we've had it now, so that's great. And like I was saying before, that doesn't actually translate. Some people think that translates to the prices immediately shooting up or whatever, but actually you'll find that quite often. Let's just take a quick second to look here. You see here this cross to the downside, and it didn't translate into the prices dropping down immediately. No, it was after the fact. These moving averages, because it's the 55 and the 200 after all, are based on a lot of historical data. So the fact that these are crossed over now has got far more to do with where we've been rather than necessarily where we're going. And in terms of where we're going, what it does is it gives us a lot of confidence when we're using things like the 21 moving average, for instance, on the daily, which can send out affirming and false signals. Just check here as an example point of that on this right-hand side of the inverse head and shoulder. And you get numerous false signals about it if you used it. Whereas when you're above the golden cross, this is just a really simple implementation of it, but I'm really trying to take away your mind from the idea that as purely as a result of this, that it's an actual tradable event in and of itself, which it isn't, which is why we're doing everything else that we do in technical analysis. Anyway, that's that, and that's that part. That's Ethereum looked at. No, I didn't. We'll go back to Ethereum for it because I didn't wrap up there. Really, what I kind of wanted to point out on the old Ethereums is that we're going to have a degree of resistance, obviously, in and around the $200 level. There's a psychological level, but no doubt if I hover around 200, which is where here, yeah, you can see this wick here and this wick here. that this is the sort of area where you could easily come up and get rejected off of, as we have seen in the past, in the recent past. And 200, obviously, the psychological human aspect of that number is meaningful. However, if we do get up there, I would expect to be rejected off our first pass, as always, as ever, because that seems to be what happens more often than not in technical analysis. However, if we do go up there and then maintain above it, then what I'd be looking at would be a potential for a good 10% rise up to the 220 or so area. I have it in here at 230. Maybe I should be saying 230 from past analysis, but I'm not going to rely on a shaky memory, and instead just point out the fact that 220 is a nice solid 10% move, and we have various areas of confluence here to suggest that that could be where we go. And in terms of things like this daily bearish divergence on the daily, like we can see on Bitcoin, very much similar story really across the board here. And really, you'd be looking for us to come up here and be able to set in a higher than the 220 or so level, so that we can turn that around and not have that divergence on the go, which we've been living under the strain of for such a long time now. Okay, that would be a solid 10% move, but of course I wouldn't be greedy, and I'd also say that you've got other areas in and around like 214 and 11 and 12 and whatever else that would be absolutely fine and realistic areas to be taking profit at if you were to do that. Again, this is not financial advice, and I don't give out financial advice. It just rhymes an awful lot with financial advice, and to be fair, sounds an awful lot like financial advice, but I'm telling you in black and white, I'm not a financial advisor. So do not take any of my advice at all. This is not advice, this is just me saying what I would do if I were to trade. And then that brings us back really to ground zero. Suppose if I wanted to on this Sunday day, just because it's a lazy Sunday, I could check out Forex markets or something like that, since we've already gone off piste. And if there was one thing that I wanted to point out, well, actually, one thing that's worth pointing out to people is that on Friday there, all of the gains that had been made in January in the traditional stocks, somebody pointed out to me recently, were completely lost there on that one day. So that was obviously a pretty bad day for those traditional markets, which is interesting, coinciding around Brexit time. Now, what did I say around Brexit time? How would it affect Bitcoin? It was impossible to say, but the likelihood it wouldn't, right? That was basically what the likelihood was. What happened? It didn't. What happened to traditional markets where there was a great deal of chance of that having an effect? Well, there was various things happening. Now, are they all related to Brexit? No, entirely not related to Brexit. It doesn't strike me as much of a coincidence that there was a big negative day on the day that Britain left the security of an economic union with one of the biggest trading partners in the world. And the only real way of having Britain have a real voice in anything to do with trading, when you're looking at players like the United States of America and China absolutely swamping Britain in terms of size and power, and long, long gone are those days of imperialism. So now we are back here now we're here for the very first time, the British pound versus euro. Now, I normally trade this actually euro to GBP, but I thought I'd bring it up this way around because it's easier to look at, and you can observe the wonderful inclines that we've had ever since it looked like it was more likely that Brexit would be going through. And if you've not been following the Brexit story, don't really worry. You can follow the Brexit story in retrospect looking at this chart here. Now, isn't that really annoying how that's that size? But we don't need the oscillators down below, and I can just move this up a little bit here so we can see. Now, look at this. In fact, I'll just go to an even bigger time frame like the week. So you can see here that Mark Carney, Governor of the Bank of England, did a very good job of not allowing the prices to drop down any further than they did here at the lows in the middle of August. And around that time was more farcical Brexit stuff happening. All of this here was farcical Brexit stuff here, and then all of this was a return slightly to realism with the Brexit front. And then, in fact, over this period here, you've had us approaching the Brexit time and getting closer to it. And really, after such a long period of lows, in fact, let's go to the month so we can see even more. After such a long, distinct downward period here of almost like close to all-time lows against the euro, bearing in mind that the euro actually only came into existence here back in 1999. It's somewhat like Bitcoin in that it's a fairly young asset. Look at how GBP has performed against the euro across the piece here. Not very well. It makes GBP look a little bit like one of those shit coins, slightly. So here we are, though. and we had this great big rise up here, and we've set in highs around that point there, and that's what I would be hoping that we could see some sort of moving up towards that in the longer term. But what would I be looking to first? Well, the immediate first point of call would obviously be where this cyan 100 exponential moving average is coming in at around this price here of 1.1. But then, of course, we have the 200 simple up here on the monthly, and that will be significant resistance. As you can see, there's also the number of confluencing factors as a move across to the left here. So really, realistically, I'm not going to do the next 6 months of GBP analysis here for us on this chart just because it's Sunday and Brexit happened, but I thought I'd point out a couple of targets to you towards the upside, because overall, am I bullish for GBP versus the euro? Generally speaking, at the moment, yes, generally speaking, although we have just come up to an area here, as you can see, where there is where we had a previous high. And first things first, before I start actually saying to get bullish on it, would be to be looking to get above this area here. And no doubt, is the VPVR available on this? No, it's not available on this. That's fine. But you can imagine here, you don't need the VPVR, like I pointed out in several videos in the past when looking at Bitcoin. You can see with these big drop candles that if we were to establish ourselves above here, we could get a jump up towards the 200 simple, right? And that would be interesting for the Bitcoin, for the GBP price. Right, that's enough of that. Let's just finish up, go back over to, for the, if you want me to do things like that, if you liked that taster of different technical analysis for you, then please do let me know. Of course, I didn't look at any oscillators there or anything like that. There's plenty more to look at, patterns and everything else that we could look at on these things. But, let me know if that's something that you're interested in the comments below. Thank you so much for tuning in today. I hope that you enjoyed the episode, and I do these every day, so come back tomorrow for more. And we'll be checking out whether or not there was a gap in tomorrow's episode, which I kind of doubt that there would be unless you see the prices have a bit of a drop today. And we'll also be checking in with things like the weekly close. Like just to summarize again and finish off, what we really would be looking for would be for this to close, have a week open and close above this candle. And it'd be great if there was a chance of us opening above this, or above this candle here, sorry, above this line. It would be great if we could have that, but I don't see it necessarily happening this week. I mean, we do only have a handful of hours left, and that could potentially lead to a CME gap as well. So what happening during the week is fine enough by me, so long as we can control everything and keep everything in a nice steady upward fashion. Now, there are the gaps there, they do remain, and that's worth noting. And also, isn't it amazing how much this lines up with this area here whenever I just moved it casually earlier on in the analysis? Is it a coincidence? No, it's not. I'll see you in tomorrow's episodes. Much love.